Alright, so pretty much I've been recording this video for about 10-15 minutes, so I have stuff already on the screen, but pretty much in this video we're going to be learning trend-based fib extension. So like I said in my previous video, you can only use this tool when the market actually breaks structure. Until the market breaks structure or 110% on fib and starts going in the opposite direction, then you cannot use this tool. So getting started, I'm going to pretty much be breaking down how I caught this home move and also had some orders on this counter trend, and in total had caught this entire move, except obviously I didn't hold my sell orders through here because I would have been 30 something days before it would have came and finally hit my extension level. So pretty much when I was analyzing the market at this time, my main analyzation was off of H4, so I was checking H1 for market structure points. When your main analyzation is off of H4, you're going to be looking at H1 and M30 for obviously market structure points, breaks of structures, and things of that nature. And of course, you're always going to be waiting for your bullish and bearish engulfings on H4. So previously, we've established that this is a higher low point, this is a higher high point. So this fib is based off of H4. Not H1, is based off of H4, so I was watching H1 at this time. Of course, first thing you gotta do is mark your higher highs, higher lows. You can see market ended up forming a high here, then a low, then it formed a lower high point, then a lower low point, starting the counter trend. So pretty much, give me 1 second. So pretty much after that, market formed a high, not a higher high, because if you check fibs, point A, previous lower high point, point B, our lower low point, it respected 100%, tested candles, and it had a bearish engulfing pattern. So right after that, as you can see, the market ended up coming down. EMAs crossed red over blue, starting a counter trend. And the market formed a lower high point, then it formed a low, then it formed a higher high. But yes, technically it did break structure, because as you can see, point A, point B, this was a 38.20 retracement. Then right after that, the market formed a low right here. Right here. Then it formed another lower high point, right? So technically the market did break structure right here. Obviously, no retest, no entry. So once the market had formed this higher high point, like I always, even in my drawings, I always say, wait for the retest, wait for the higher low. You're not going to buy at a higher high point. That's exactly what I did. Oh, my apologies. The market formed a low right here. That's exactly what I did. But as you could see, it did form a higher high, but all of this buyer's exhaustion really didn't convince me. Yes, EMAs were crossed blue over red the entire time. Let's just really quickly highlight this area. Go back to H4. So on H4, we did have a bullish engulfing pattern, but look at the EMAs. There were still more sellers overall. That's why I didn't end up placing my buy order. You want EMAs to be crossed blue over red if you're looking for buy opportunities, blue over red on your higher time frames and blue over red on your lower time frames. So that's why I did not enter my sell or my buy in that case. So as you can see, also the market formed on the 4-hour time frame a bearish variation pattern, which pushed all the market down all the way to 100% retracement on fib. So let's go back to the hour time frame. Okay, so obviously 100% max retracement. Obviously this at this point in time, as you can see, it was still being maintained and respected this entire time until this candle came, closed on 100%. Even these candles, this was an overlap. These candles still didn't break it. So as you can see, the market came down, closed. This candle, pretty much it's almost a doji, so I'm going to ignore it. This candle came down and closed as well. And then the obvious break of 100% was when this happened right here. So as you can see, that's a break of structure. Now let's verify that on the 4-hour time frame, because that fib is placed on the 4-hour time frame. It's only valid for the 4-hour. As you can see right here, boom, boom. That's what a broken area of support looks like. So yes, the market did break structure, came all the way down to 120%. So now we're looking at a different bias. So let's delete all of these. Now we're looking for sell opportunity. Am I automatically going to sell on a lower low point? Of course not. That'd be ridiculous. So let's delete that. Let's delete this. So now we switch our fibs. So we go from our previous lower high point. Here's our most previous high because the market didn't break structure here. This was just a counter trend on the lower time frames. So point A, previous high. Point B, to our lower low. I'm going to drag it out. Oh my lord. Here at this area of support, I'm going to place it right there, just because this market gap is a little bit confusing. But normally it's supposed to be, there we go. Normally it's supposed to be at bearish candle wick. So I'm going to place it right here at this area of support. So as you can see, now obviously the market started counter trending. So now we're going to go down to the hour time frame. As you can see, the market did break structure on the 1 hour once it broke this area of resistance, being a previous lower high point. It broke structure, starting a counter trend on the hour time frame, or starting a counter trend on the 4 hour time frame, starting a uptrend on the 1 hour time frame. So now we have to wait for a break of structure again to look for a sell opportunity. What does this break of structure look like? Look like a break of a higher low point. So as you can see, this is a higher high, this is a higher low. And then this can get a little bit confusing. As you can see, exactly what I said about this 50% zone. It's unbalanced, so you could find consolidation. The market could be really slow in this zone as well. Just keeping that in mind. Now, the market obviously has to break a higher low point for the market to for us to actually be able to take up an opportunity and to actually get in on a sell order in this case. So here we have a higher low point. Here the market formed a high. Here we have a higher low point. So let's just draw that out, put it here, and drag this out all the way. So of course, now once the market actually had broken structure, the first break of structure I believe was, I think, a median point right there. Boom. I had my first sell opportunity, I believe it was right here. Right there. That was my first sell opportunity. Yes, I did see drawdown in this trade. I saw a most of 28 pip drawdown. You know, it's a lot of pips, but it's not too bad. EMAs were already crossed. The market did break our previous low, but you know, I'm being honest, I don't always get the most perfect entry. So here I did have one order, and I believe I had an entry right here, right when EMAs crossed, out of confidence as well. So let's keep that in mind. Now I have two entries. This one out of confirmation, this one out of confidence. Yes, I was up a whole 46 or a whole 40 pips on this order, but it could have easily gone in the opposite direction. And look at my stop loss area, 110%. So EMA's crossed. Now obviously waited for H4 to confirm that it was going to come back down. It did have this kind of bullish bullish candle engulfed, so obviously I had to wait, and then had this bearish candle come right back down, tested on the 61.80. We did have a bearish variation as well, starting to show that sellers are starting to try and take control again. But of course, once EMA's crossed right here, and I saw that on H4, that's when I had a sell right at the top of this candlestick on the hour time frame. Then that's when I ended up placing the actual entry. As you can see, right after that, it was immediate profit, you know, just like that. So once this was confirmed that this is a lower high point and the market had formed a lower low right after that, we can now pull out our trend-based Fib extension. So keeping in mind, here's our point A, here's our point B for Fibs. This was a 61.80 retracement. Let's keep that in mind. Now, how this works, it is a 3-step tool. So we go from our previous high to our broken structure lower low. So it's the same point A and point B on Fibs, except the only difference is now we have a point C for our trend-based Fib extension. So I'm going to repeat this again. You can only use this tool on a break of structure. So here's our point C right here. So if the market retraces off of 61.80 or 61.8%, then the expansion level for that is 161.8. So as you can see, right here was my take profit 4, and it got 100% smashed, and it went down to test my monthly support and resistance area. So I had a lot of confirmation for this trade, especially as in why I believe that the market was still not going to go on a downtrend in this case, or on an uptrend in this case, because this was a counter trend that I knew a lot of people were buying at, obviously forming higher highs and higher lows, but I knew it was going to be broken easily, and I took advantage of that right when this candle closed under my trend line. Remember, trend lines, buy zone, sell zone. So, and I had taken an entry literally right here. Obviously I could have gone in before that, but I was waiting for the trend line to be broken. So took an entry right there, and as you could see, I caught it wasn't 279, it was 260 pips, but that's pretty much how I use it. But I'm going to give you the other expansion levels really quickly. So if the market retraces off of 38.20, then the expansion level will be 224% to 61.80%. If the market retraces off of 50% on your Fibonacci, then the expansion level for that is 200%. If the market retraces off of 61.80%, just like it did right here, then the expansion level for that is 161.80. If the market retraces at 78%, then the expansion level for that is 127%. And if the market retraces at 88.6%, then the retracement or expansion level for that is 113%. And I believe if the market retraces 100%, then the expansion level retracement is also 100% as well. So that was pretty much it for this video. Hope you guys enjoyed it. Of course, if you have any questions, obviously contact me, email me, DM me on Instagram. And that's pretty much it for this video, and I'll see you guys in the next one.